Yeah, I didn't, yesterday session, I didn't share it. I recorded it. So I'm going to share it to you after this session, actually, both of them with today's session. Yeah. So I'll share them, or I'm likely to have them on a YouTube channel, then everyone can be able to access them from there. So yesterday's session was very long, and I do believe that it didn't leave you the same. Yeah, I gave you 10 pillars for a successful what? For a successful journey in forex trading. Yeah, there were 10. The first one was discipline, patience, resilience, adaptability, realistic realistic expectations, emotion control, continuous learning, risk management, positive self-talk, accountability, and lastly accountability. So as you continue pursuing this journey of forex trading to achieve success, make sure that at least you always um, revisit these 10 pillars, because the moment you always remember them, it will it will help you towards succeeding in this field. And by the way, it doesn't require a lot of time for someone to be successful in this field. Like I told you, the first thing is having a dream, believing in the dream, and being determined to achieve that dream. eh, no matter what may come in, being determined, because what you may pass through, many of us passed through that stage, and it was only through not giving up that we're able to make it to this level. So today, I would like us to go through a market analysis. How do you do market analysis? I believe everyone can see my screen. Some of you haven't completely mastered this skill. You are still pursuing the mentorship. Yeah, but still, these are very important things for you to always remember as you continue pursuing the what? As you continue with your mentorship. Yeah. So before you come to the chart to make analysis, you have to make sure that you are in the right position to do the analysis. Your emotion, your emotions, you are in the right state of emotions. Um, you have realistic expectations. You are ready to apply risk management. You are ready to follow discipline, and you are ready to be adaptive to the market. So the moment you make sure that all those 10 you have them in control, you are in the right place to make analysis. But the moment those 10 are not in the are not in your control, you won't be able to make you won't be able to make successful market analysis. And successful market analysis, I don't mean like you make your analysis then you be make successful trades. No, I mean successful market analysis that will enable you to to plan for your trades before entering. We love money. Yeah? We love to look mostly on the profitability side of the market. Actually, the one of the things why people fail in this market is because they only look on the profitability side of it. They don't look on the losing side. And not forgetting that when you look on the losing side, you're going to have well calculated risks and well planned trades. Today, today, there's a colleague of mine. Um, Actually, I believe it's called Paco. He was having some challenges. Yes, past week, actually, I think like 2 months back or 1 month, and then I had a meeting with him. So I guided him on to what he should start doing before entering the market, and he has been um, and he has been applying it. Has been applying it. Today I was happy. He sent me uh, he sent me a message whereby he had 19 trades, and on the 19 trades, only 3 trades had hit stop loss, but the rest of the 17 trades were successful. Mm. So, if 17 trades have been successful and only 3 have hit stop loss, it means that you are on the right journey. Mm. You are on the right journey. You made your analysis, you trusted it, and then you entered the market. Then, when you entered the market, you trusted your analysis, and then you left the market to judge you wrong or right. But the moment you make sure that all those 10 pillars that I gave you yesterday, the moment you make sure that all of them you have all of them in control, you are good to do what? To make your analysis, look for trades, and then become and then what and then succeed. Actually, like these all these 10 um, they do fall in the three major actually there are three major pillars. The three major pillars that is the mindset, developing trading discipline, risk management. So the moment you make sure that these three mindset, so I have emotions going against the discipline. Actually, the other 10 fall in mindset. That the other 10 that I have just listed again for you. They do fall in mindset. Going against the discipline, not being adaptive to the market. So, after managing mindset, then developing trading discipline, that's also rotating around mindset, then risk management. So, these three pillars majorly are the key to successful forex trading, are the key pillars to successful forex trading. I I wrote them down, and actually let me even first share them right now in the group for everyone to not forget them. Just a few minutes. So if at all these are not in your control, then you are not good to make analysis and then look for entries. And then the other thing that you have to make sure that you don't forget is not forgetting that the market is here to stay. This market is here to stay. It's not going anywhere. If you're not in the right state of emotions to trade today, don't trade. eh? Come back the next day. And through doing that, you will be building what? You'll be building discipline, and which discipline will help you to succeed in this field. Sharing these sharing these 10 aspects for a right for a good mindset. Share them in the group. Mm, yeah. So that was yesterday. I've shared in the group with them in the group. Then everyone can access them. So right now, I would like us to go through market analysis. So after making sure that you have everything we handled yesterday in control, then the next thing is market analysis. Along my journey in forex trading, I realized that um, people undermine the power of market structure. Market structure, um, this is where we have the support, resistance, supply and demand. So most of the people they do undermine undermine the market structure. You cannot you cannot be successful in forex trading if you undermine market structure, because market structure is the skeleton of the body. For those of you I mentored and those I'm still mentoring, you do remember that. I always tell you that it doesn't make sense for someone to master price action candlesticks anatomy when you don't know, when you have not mastered what? Market structure. I've seen traders that do trade and whereby they just trade only following market structure. And actually, not only that, even me personally, I can trade whereby I'm just trading on market structure, not applying what, not applying price action. But when you add in price action, then you have a very complete what? A very complete analysis. So every day, before you before you take any trade, the first thing that you have to do is market structure. Because when you find market structure, you are going to have found turning points in the market. Bullish turning points and bearish what? Bearish turning points. We have a support zone. You already be knowing that by the time the market will be reaching that zone, buyers will be getting in and the market will be doing what? And the market will be buying. eh? And the market will be buying. So people ignore market structure, but it's very what? It's very important. The moment you make market structure your friend and you understand it completely, you find that your trading will be simplified, and you find that your market analysis will be simplified. It's very easy. You come to the chart, you find the zone, support and resistance, and then trade in what market structure is telling you. And when I talk about market structure, it's not only market structure, but this is where we have this is where we have a trend. Right now, this candle, this is gold, this candle is facing rejection. This rejection is not coming all the way from anywhere. It's coming because the sellers, buyers had occupied this area. Buyers had occupied this area, and they're still proving, they're still trying to prove to sellers that this is our zone. Don't do what? Don't go beyond it. So note these things of trading, following only the indicators that the candles are up above the moving averages, and then you just be knowing that you just have to buy. No, but when you are trading and you applied your market structure zones very well, you are going to be having a good journey. You're going to be having a well definable journey. If you have had a bad trade, you can see that I've had this bad trade, but still the market is still within the buying zone. So any bullish, any buying confirmation, you can still go ahead for what? For buying trades. Yeah. By the way, those of you who enjoy trading gold, we are going to have a day specifically for how successful one can be profitable and consistent in trading gold. Yeah. So now when it comes to market structure, the first thing that we have to do, any kind of trade, actually there um, forex trading is wide. Forex trading is wide, whereby there are many types of market analysis. There's ICT, smart money concept, but all these things are all the same. Just that some people, they try to come up with different strategies, but the only way that I define as the only way to successful trading in fixed trading, it's only through mastering market structure. That is mastering technical analysis. Technical analysis. That's where we have market structure, price action, candlesticks, anatomy. Yeah, just only those. The moment you master those, then you're good to go. Okay? Not to just get confused that someone is talking about ICT concept and then you also want to master ICT concept. No, you just be wasting your time. You just be wasting your time. The only key to success is only through focusing on to what you mastered, because there are people who have been profiting from it. It means that you can, but just that you just have to revise your analysis as you keep on doing what? As you keep on growing. Yeah, as you keep on growing. So, personal price action trader. I'm a market structure and price action trader. And someone cannot come and confuse me that, hey, Hannington, you know what? Um, ICT concept is good. What? No. At the end of the day, when you try to interpret ICT, you're going to find that it's taking you straight to it's taking you back to what? To market structure, and the logic will be the same. So for those of you who master the price action market structure, stick to price action and market structure. Just that will enable you to be successful in forex trading. All these other strategies, ICT, were derived from price action and market structure. So don't get confused. You go on YouTube, you're seeing a lot of different strategies. No, stick to what you have learned. Stick to what you have learned. You have not learned only like trading, following the indicators. You have learned market structure, price action. Stick to that. Stick to that as you keep on trading. But the more you will be, today you want to trade price action, tomorrow you want to be in ICT, the next day you want to be in smart money concept. Oh, you just be getting confused. And the other thing is, Market analysis doesn't need to be complicated. You don't need to have a lot of concept. You don't need to have a lot of knowledge or all kind of knowledge in forex trading. You just need to, if you are price action trader, market structure trader, focus on to that. Focus on to that. The more you keep doing it, you're going to be growing. You'll be communicating with the candlesticks. You'll be able to tell that, this bullish candle is very big. Even if it's a selling trade, I know I cannot just hurry and sell right now, because we will be knowing that big candles signify a lot of strength on a certain side. For example, um, you have seen um, this big bullish candle, and then just want to hurry and sell without getting confirmation. No, the market will still have to first buy before selling, even if the market has reached its resistance. Just like here, there was this is a resistance zone, buyers bought, but then sellers had to come in. So that's how price action is. So so the moment so when you focus on what you learned and you stick to it, you'll be growing, your skill will be growing, and it will not take you so long for you to break through in this market. So if someone is here and you didn't master price action, you didn't master market structure, you need to completely master them, because those two are what moves the market. Yeah, so those two are the what moves the market. So let's get to uh-huh. You have wake up in the morning, you want to make your analysis. And by the way, any trader, when the week ends, you have to make sure that before the next week starts, first try to make some kind of weekly market analysis. Try to make what we call weekly market analysis. When you make weekly market analysis, the the each day in the week will be each day in the week's market analysis will be very easy, because you just be having something that you already analyzed and you just have to follow it. The moment the market is trying to go against it, then you just be knowing that this is what I have to take. So to make your to make your to make your weekly market analysis, um, the first thing that you have to do, actually, on all kind of market analysis, you focus on top-down analysis. What does top-down analysis mean? Top-down analysis means that you start from the higher time frames going to the lower time frames. So when you do top-down analysis, starting from higher time frames going to the lower time frames, so when you make your weekly market analysis, you're going to find that each day in the week will be very easy for you to trade it profitably here. So now this is gold, and by the way, we're going to do weekly market analysis on gold in right now in this session, and this is how you can also do your weekly market analysis. So the first thing that you have to do when it comes to weekly market analysis, the major time frames that you have to majorly focus on, it's from week one. From week one. So when you come on week one, The major thing that you want to see is the trend. Is that trend? Which trend is taking place? And then the other thing, after identifying the trend, the other thing that you have to see on week one is the how the previous week closed when it comes to price action. I hope you get me. You make a look on two things: the trend and how the previous week closed. When you see and when it comes like how the previous week closed, I'm meaning like when in price action language, which type of price action candle did the previous week close with? Mhm. And and then the other thing that that you don't have to ignore is the what? Also need to come as so you have to look at price action, how the previous week closed. Because when you look at how the previous week closed, it will tell you how the next week is likely to begin. So right now when you come on gold, um actually, we do what we call top-down market analysis. But just like I've told you that you don't close the week and enter the week and start trading when you have not made weekly market analysis of the pairs that you trade. Actually, this doesn't only apply onto the currencies. Even the people that trade synthetics, you can also apply the same knowledge. Everything that we are covering right now can be applied in both currencies and synthetics. Personally, I traded synthetics. There was a year when I was trading both currencies and synthetics. Um, and people like Sylvia, I believe you remember that year when we traded so much synthetics, and synthetics were good, but I realized that I made my own research and I discovered that synthetics, since they are not having something strong attached to them, whereby currencies are attached to currencies of strong countries that are performing well in the global world economy. But when it comes to synthetics, they were just programmed by a company called Drive, meaning that Drive can determine how should the market move. How should the market move? And I discovered that when it comes to synthetics, those guys they do have algorithms or systems that can detect consistent, profitable traders, and then they start doing what? They start um, trying to make sure that they can start trading against you. Yes, so when someone asks me that between currencies and synthetics, what can I focus on major to be successful in trading financial market? I advise someone to opt for currency trading because currencies um, they move the according to the economy of a certain country. Like for example, the all pairs that are attached to the United States dollar, they move according to the way how the US dollar is performing in the entire world. So for those of you who are trading synthetics, you can continue trading them, applying what you are mastering right now. But I would advise you to start the journey into currencies because the journey into currencies it's what will make you a big and successful trader. There are very few. I haven't even seen any successful trader who has been trading synthetics for over 10 years and he has a big record of what? A big record of success. Yeah, there are very few. Not because people who are very profitable are not there. No. Because people are there, but then drive tries to go against them because it's the only drive that can determine how should synthetics move. And by the way, me by the time when I quitted synthetics, those people, their their assets couldn't be even respecting price action, even market structure. You could find that the market has given you a very clear bullish engulfing candle. It's a bullish trend, and then you buy, and then you find that for them, they are trying to sell completely. Mm. So when it comes to everything that you're mastering, price action, market structure, it's well respected when it comes to currency trading compared to synthetics trading. Let's get back to our topic. So when it comes to top down analysis, the first thing that you have to look at is how the what the trend is. Like for example, right now, this is a buying trend. And for those of you who have been attending my weekly market analysis, remember we analyzed and found discovered that gold is targeting 28,000 before the year ends, and as long as the pair is still trading above 26,000, expect the market to be more into consolidation or bullish. Yeah. So this is how it is. Huh? The first thing that you have to do when you're doing your weekly market analysis, you look at the trend on D1, and then after finding the trend, you look at how the the previous week's candle closed in line with the price action. Like for example, this the previous week's candle, it closed with an inside bar bearish candle, meaning that this week had to start selling majorly before it can continue doing what? Buying. We have discovered the trend is a buying trend, but the previous week it closed with a price action candle that is communicating what? That is communicating selling as the week is beginning, and that's why yesterday in the morning the market sold more than it bought just because of how the previous week closed. So, if someone had made his or her own weekly market analysis before entering the market this week, yesterday on Monday, you could majorly be focusing on looking for selling opportunities because of how the previous week did what? How the previous week closed. Yeah. So the previous week closed with this inside bar bearish candle. That's why the market had still majorly, but then we are in the buying trend. Yeah. So after looking at W1, then you come on D1. Still on D1, you look major at the trend, and then someone is raising a hand. Hmm, who is raising a hand? You can unmute yourself, then you say what you want to say. If there's no one, then I can continue. So we have discovered that this week had to start buying majorly, but we are in the what? So we had to start selling, which took place yesterday, looking at how the previous week's candle closed. So, and we are in the bullish trend. After that, you come on D1. When you come on D1, don't ignore your market structure trend lines. So you apply trend lines on the swingy highs and the swing lows, and you focus on those most recent ones. Like right now, when you look here, um, these are when you look at this market, this swing it's more in coordination with this, but someone else can also connect this with this. Let me show actually. Let me show this trick. Someone can find something like this, but even if you don't apply that, as long as you have these two, this trend line resistance and trend line resistance and trend line support. So after finding those ones on D1, remember we are doing a weekly market analysis. We close the week and and it's a Sunday. You are doing your own weekly market analysis. You have looked on W1 to see how the you have looked on W1 um, to see how the previous week closed and which trend is taking place. After which trend is taking place and how what price action candle closed the week. After realizing that, you'll be having a clear direction of how you expect the week to start. Then you come on D1, still you apply your trend lines, trend line resistance, trend line support, and then you look for uh, after that you look for strong support and resistance levels. Like for example, when you look here, um, there's this swing low, and then there's this one, and then the market is trying to hit another one here. So when you look here, we can see that. Yes, Olivia, you're raising a hand.
It's a mistake.
Yes.
It's a mistake. Miscommunication. Sorry.
Oh, okay. So I was telling you, after after applying the trend line resistance, you also apply trend line support. So this is what I have, and I can see that we are still in the bullish trend. But when you look here clearly, you can see that here we have swings whereby this swing is lower than this previous one, and we have this high whereby this high is lower than this previous one, meaning that sellers have also created something that they're trying to build into something like a trend, basing um, on these two things, this one, and this one, and then here up, they have also created their own trend line resistance basing on this string and this string. So, so after finding that, the next thing is to find the horizontal zones. Hmm? We have discovered that um, we have discovered that we have a buying trend, but sellers are seemingly very determined to also create their own what? To also create their own selling trend. And when you look here, when it comes to chart patterns, sellers are trying to create what we call a descending triangle. Yeah, sellers are trying to move in this kind of direction. But when you look widely, we are still within the buying trend. So right now, even if we are still, even if we can identify some kind of selling trend that the market is trying to build, but as long as we're still within the range of trend line support and trend line resistance, buyers are still stronger than the what? The buyers are still stronger than the sellers. Unless when a selling candle, when sellers come and they push the market and the market closes below our trend line what? Our trend line support, then that's when you can see that we are no longer having a buying trend. But right now we are still in the buying trend on gold. While sellers are trying to do what? Sellers are trying to create a what? A selling trend. So after identifying that on D1, the next thing that you have to find are the horizontal zone. And when you look here, we have this swing low, and then we have this swing low. Let's apply here our support here. So right now I can first get rid of the trend line support of the selling trend because we are still within the range of the buying trend. So I can remove this one. Yeah, because we are still within this range. Then I can also remove this, and then I give my attention to buying opportunities. I believe everyone is following you very well and understanding. For those of you who are already trading and you've completed your full market full training, but you have been just having a challenge of market analysis. So after after refining the D1 analysis, we have got rid of the selling trend because we're still within the bullish trend. So then we go to the horizontal levels, horizontal zones, and I found this as our first horizontal support. Then there's this previous one. We can't ignore it because even when you look here, the previous week respected this zone. I believe this zone is around 26,000. And for those of you who attended the other week's market analysis, you remember we discovered this. Yeah. So we have this zone. After this zone is between 2602 to 2605. It's here. Yeah. Then the other thing, by the way, that I would like to not to forget about is when you are applying your market structure, um, your resistance or support, don't use one line, or try to give yourself like a minimum of 3 points. For example, if when you find that um, your your support is at um, 2602, then at least add on 3 points. 3 points now from 2602, you'll be going to 2602, 2603, 0405. Then you can get your second line and you apply it there. to that second what? To that second point. To the third what? To the third point. You count 3 points. You count 3 points. My lines are big, so it's around there. So you'll be having this as your what? You'll be having that as your support. Then resistance. Um, so we're having this, we're having two horizontal supports. This one, yeah. Then now this one was at 25. Hmm, this one was at 25, 52 to 25, 55. You just be adding, actually now like for gold, just be adding 3 points. If it's 27, 27, 20, 20, then 3 points, it's 27, 21, 22, 23. By doing that, it will help you to avoid what we call the false breakouts. You avoid what we call the false breakouts. So right now, when we look at gold, we have our support zone here. This is the first support zone, then this is the second one. Yeah, this one we're basing to this point, to this swing low, and later it was respected here. As you can see, this market created here, it closed with an inside back candle, and this can experience rejection from this entire from this same area. I believe everyone can see it. So meaning that this is a strong area of attention which you cannot what? Which you cannot ignore. So after finding that, we have two supports, this one and this one. Don't forget the few points that I've taught you. Just be adding 3 points. Even if it's a different pair, not gold. Personally, I trade mostly gold. Even if it's a different pair, try to make sure that you add in at least 3 points. So this is our support. We have even this one. We have found that we are in the buying trend. We are in a buying trend. So meaning that we shall be majorly focusing on two buying as traders who trade following the trend. And the other thing that I can talk about the trend is that don't try to make sure that you trade following the trend. When you trade following the trend, actually, I also told you this yesterday. When you trade following that trend, the market will always give you an opportunity to close your orders in profits, even if you entered with your in this spring, you entered with big lot sizes, the market will always give you that opportunity. But you find that someone who's not trading with this spring, you're going to enter with big lot sizes, and by the time the market will be coming out to follow the direction of that trend, you entered with big lot sizes going against the discipline, you find that the market already did what? Moved you out. Yeah, you find that the market already did what? Moved you out. And you'll be like, if I had entered with small lot sizes, right now I would be in good profits. So that's it. So we have these two support zones, meaning that when the market reaches this area, when the market comes down um, at our support, like there, we shall be expecting buyers to push this market again into buying. Then, if sellers manage to break this support, it means that it will no longer be support, it will be what? It will be resistance, meaning that the market will be targeting the next what? The next support. And the moment the market comes here and that day closes with, and that day closes with the price action, and the next day closes with the price action confirmation, that is confirming you to buy, it means that the next day the market will have to buy because buyers will be targeting to push this market from the support zone to the next resistance, which would be this. because this would be a previous support, but after breaking it, it became support. It became resistance. So that's how it is. So on D1, you make sure that you don't ignore the zones. So right now on gold, um, the market is we have these we have two supports, this one and this one. Now let's go to resistance. Mm, uh, Basing to this level, there's this swing, there's this swing. So it means that um, if gold is to buy, its major target is this. And by the way, for those of you who attended my last week's market analysis, remember we analyzed that gold is targeting 2675. For those of you who attended the last session we had, I'm sure remember that we analyzed and found that gold is targeting 2675 as its nearest target. Yeah, and after identifying this, we have these two supports. All right, now we have found this resistance basing on this previous swing. This previous swing, cannot ignore it. So it means that right now the market of gold is the market on gold. The market is still moving after having hit this support. The market is buying towards this next what? This next resistance. Actually, it's from 2672 to 2675. Yeah. So that's how gold is. And right now, even if we have some kind of consolidation, the major target on gold it's but we are still in the buying trend. And because the market is trying to move off from the what? From the support towards this what? Towards this resistance. Then what is our next resistance zone? We have two support zones down on D1. Then our next resistance zone, um, where the market created a clear swing. It would be this, but we cannot ignore this point. Oh, 2790. But again, there's this swing here. There's that swing there. So this is what it means. Huh? Why we are considering this swing? It's because, so actually, let me even first remove this line. When you look here, this market after creating this swing high, it sold. After saying buyers bought a bit, then sellers came in, they pushed the market down, market bought again, and the market went into this area, it sold again, meaning that we cannot ignore this area. And by the way, when it comes to these zones, the more times that a zone is tested many times, it becomes a strong area. So right now, gold is buying towards 2675 minimally when we're basing on this swing. So we expect this market to close whereby it's having more buyers than sellers, or it may buy up to around 2675 and then it sells again. The chart you're seeing isn't showing the cursor. Um, Can you all see my analysis and the lines and the line that I be using to show you the direction is?
Yeah.
Yes, you can.
Okay, good. Yes, so Emma, I don't know which chart for you are seeing.
is not showing. So when you say that it's
You are on and off. Emma, you are on and off. Emma, I would advise that if you're not seeing clearly the screen, just get off and then you do it, and then you join again. Yeah. So you are doing your weekly market analysis on a Sunday. You first start on week one, then you come on D1. On D1, you make sure that you don't skip those swings points. Sometimes there might be, when you find that the swings are so many, focus majorly on those swings whereby the market respected them so much. Right now here, um, we have this we have these two supports and we have these resistances up. Those are few, but if we had like many of them here, we would only focus on to those ones whereby the market bounced off so many times off them. I believe you get my point. When you happen to be in the area whereby there seem to be a lot of noise, whereby there seem to be a lot of market movement, focus on to those zones or all those swings where the market bounced off so many times from that area. And then those zones whereby the market didn't respect them so much, you leave them out. But when you are in a scenario like today whereby those swings are few, then you just do what? Then you just move with those. So right now, as part of our top down analysis, we have seen that gold is targeting towards 2675. And in the last weekly market analysis we had, remember I told you that as long as gold is still trading above 2636, sorry, 2634, focus on two buying confirmations and buy. I believe you remember that. So that analysis is still valid. So when you come on D1, you find those zones and you respect the market, and then you try to respect the market structure, trying to define how you can expect the market to move. So this is how this market may move. This market is likely to continue buying up to 2675 as the most nearest resistance, because even we are in the buying trend. Or if not that, we are likely to have consolidation. We are likely to have consolidation. Sellers may try to consolidate, just like today. Even today, there was a lot of consolidation, just like you see here. There was a lot of consolidation. So we are likely to have more consolidation or more buyers this week, because buyers are targeting 2675. And the moment, so this is how you can do your analysis, that after identifying your resistance zones and support zones, the moment now, like here, the moment the buyers push the market and the market closes above 2675, buyers will be targeting the next resistance, because this will not be still what? This will not be still support. It will have become resistance. So, but then, when the market breaks the resistance, when the market breaks a resistance, by the way, take this trick. When the market breaks resistance, don't hurry and take breakouts. Don't hurry and trade breakouts. The personally, out of experience, the strategy that I do recommend and which is good for breakouts is to wait for them on the retest. I believe you get me. Wait for them on the retests. What do retests mean? Like for example here, if this market breaks here, someone just keep hurrying to do what? To buy. But personally, I wouldn't. If I'm still having in trades, I'll just keep on trailing them, but not doing what? I'll just keep on trailing them, but not buying again. Yeah, even if resistance has broken, it has become support, meaning that more buyers don't just keep on hurry to buy. But then, if the market has broken this resistance or a resistance with a big full-bodied candle, you can go on and buy because big-bodied full candles signify strength, a lot of strength in the market. And as long as that is in line with the trend, just keep you can do what you can and still enter the market, but applying risk and money management. But then personally, I would wait for a retest. This is what a retest means. When the market breaks this resistance and it keeps going up, like at least somewhere around there, I would wait for the market to, when the market tries um, to come, this is what a retest means. This is what a retest means. After the market breaking a certain zone, goes down or goes up, when it comes again to test that area, just look for confirmation and you buy or sell. So when the market breaks, if this week closes with now let me first complete the other side. Well, if the buyers break this market, the market will likely buy more towards 27.15. But then don't ignore looking out for retests. This is what a retest means. That after the market breaking this resistance, wait for sellers to try to push this market to come down. If this market comes down again to 26.75, there you just be looking for a buying confirmation. The moment you get a buying confirmation here, it will be a jackpot. That's when breakouts are more accurate. After the market breaking a resistance, buying, wait for it to, as it's trying to come back again. When it comes in this area, selling, get buying confirmation, and what? And you buy because that the market will be respected that what? That market structure zone. And it will be buying more. So let's assume that the market has broke this support zone. When the market breaks the support zone, you can keep selling with discipline as long as candles that have closed selling are full-bodied selling candles and big candles. Then don't forget to mark a retest on that zone. This was the support. When the market breaks it and it sells more, it means that it becomes resistance. Meaning that in your trading journal, by the way, you should be having trading journals where you can be noting these specific things. So after the market breaking this support, sells more, it will have to later come back in this area. By the way, this is a market cycle, meaning that the market keeps on doing the same things it was doing. So some people do ignore to mark these things, but they are very important. When the market breaks a support zone, mark it somewhere. It will help you in the future. Because the market, when the market tries to come back in this support zone, which was a support zone but it became resistance, there will be very few traders who are still remembering that area. There will be very few. So when the market comes back in that area, and that's new resistance, and then you get a selling confirmation, you can sell because the market will have to go to do what? To go down. That's a tip I've given you about the breakouts. I believe everyone has got it very well. So right now on gold, we are expecting more consolidation, but we are still bullish. And as long as we are trading above 26,000, and the market is still above 26,34, look still more for buying opportunities. That is it for my colleagues that trade gold. Yeah. So on D1 you identify your strong zones, and after identifying them, you go to H4. So when you come on H4, you have to make sure that H4 is in line with what you identified on D1. If H4 is not in line with what we identified on D1, it means that you are not yet good into what? Into market structure. Yeah, but I believe just of what we have covered, everyone is coming good in market structure. So when you come on H4, you you try to see if H4 is also in line, if H4 is also in line with your analysis. And when we come here, we can see that H4 still, the market here is still ranging within 2060 and 2675. Yeah, 26 and 2060 thousand and 2060 70 and 2060 75. But then, like when you come on H4, try to make sure that you can identify the most nearest supply and demand zones. H4, by the way, is measured for supply and demand zones. When I come here, when we come here on when I come here on H4, this H4, on this H4, we are having a supply zone here. We have this supply zone basing on these three candles. Um, so I can mark this as a supply zone. We have a supply zone here basing on these three candles. And how to mark demand and supply zones? Um, you look where they are. This is a minimum of three candles, three big candles, three selling big candles. Candles shouldn't be lower than three selling what? Three selling candles. And then you look at the, so these are the three selling candles. And then you look at the previous candle. So, like when you look at the previous candle, it's based on it. That's how you can apply your zone. Or the best way actually personally that I do is I base on that very candle which sparked off that rapid move, and I find to what 3 points. For example, here this candle is at 2060, 60. So I just go below 3 more points below 2661, 2660, 59, 2658. So that way you can apply your second line. But then, um, even if you don't mark, even if you don't mark them with two lines, but you don't, you just make sure that swings the market, whereby the market had more than three candles, a minimum of three candles, and big candles, that's a supply or demand zone. This is a demand zone. This one here, try to decrease. So on H4, we have this supply zone here, and we have this demand zone, which is very low. Yeah, but then we cannot focus onto this when we are still within this range of 26,000. So right now, it would be best for us to focus on 26,000 and 26,75. Then, when we are not also ignoring this demand zone, and this demand zone actually it's a demand zone, but then there is also a resistance zone here, and we can see that H4 is still within the range of our D1. So after identifying that, you go to H1. So when you come on H1, you have already made your top-down analysis. Now you have come on H1. So on H1, now you can find those H1 what? Those H1 levels, but while still having these major ones. So these major ones meaning that before you enter the week, you have already marked these zones as your weekly what? As your weekly zones. So then when you come on H1, um, there you can identify your what? Your tight resistances. Like for example here, um, like for example here we have a resistance here basing onto these two swings, and we have support down basing onto these two swings low. After since we are done with the major big time frames, I think I can go to my trading view chart, um, which is having major H1.
I'm so sorry Lucas isn't here, but if you want, I can help you with. What was it again?
Oh, okay. To be honest, we need to talk to him personally. After everything that happened, we can't really. The only person who can help us with that is Lucas. Lucas has to remember something else. I saw him that day, and he was doing much better than us.
Something else? Like what?
What did he tell you about that day?
So to avoid a lot of noise, I use I use different charts. I filter out my weekly analysis from the normal charts, then I come from the normal charts of MT5, and then I come to trading view. So when I come here, I'm majorly mapping my what? Um, I'm majorly mapping my H1 zones. So when you come on H1, mhm, so I hadn't even updated this what I hadn't even updated this I hadn't even updated my trading view, but this is what I was telling you. Get this trick that I was telling you before. This was a resistance zone. I had marked it as a resistance zone, but the market broke it and the market sold further down. When the market broke it, it became, actually, it was support, but the market broke it and it became resistance. So after becoming resistance, the market went down, and then later the market started coming up again. So when the market came up again, it broke it and it became support. It became support. So today, it's the major support, the most nearest support that has been actually still valid. So that is our major support in today's market on gold. So this would, remember, this was resistance, market broke it, it became resistance. Sorry, it was support, market broke it, it became resistance, and then market broke it again, it became support. So after market breaking it and it has become support, what you do, you can buy after the breakout with a full-bodied candles, just like I've told you. But then mark it somewhere that this this has been a resistance, but the market has broke it and it has become support. Mark it, note it somewhere for future reference or for future use. Now, like here, this market bought and then later started selling. As it was selling, we could be waiting for it to come and retest this support. Same thing the market did, came down, retested this area, and then it bought, then sold again, came and tested the same area, and then bought again, and then sold again, came to test our same area, and then bought again, and right now it's sold again to come and test our area. And that's why the previous hour was having rejection. I believe everyone can see the previous hour was having rejection because of this support zone, but it was initially resistance, became, it was initially support, then it became resistance, then market broke it, became support, and the market has been retesting it more than one time. So that's the best way to trade breakouts. The moment you identify a breakout, don't ignore it. Note it somewhere, wait for the market to come and retest that area. The moment the market comes back and tests that area, you just get confirmation and you buy. When you buy, you find that you'll be making money. Let me show you. Here, this market after breaking it, came retested it, sellers got rejection, closed with inside back candle here, with a doji. Then the next candle bought more before it sold. Then later closed with the engulfing candle and it bought, came down again, tested the area, closed with the inside back candle or the doji, and then it bought. So for someone who has mastered completely um, market structure, in consolidation markets like this, you can trade, actually, personally, in these consolidations, I can trade only market structure. I can trade only market structure. And why would I still be respecting taking these buys more than the sells? Because we are in the buying trend majorly. I hope everyone can get me very well. The best way to trade breakouts, the best way to trade breakouts, yes, Shaq,
Yes, Mr. Teacher, you earlier on told us that when resistance is tested 3 times, it becomes a weak resistance. Now,
yeah,
doesn't apply to support as well? That in
it's
case,
the same thing.
because we are seeing support is tested like 3 times, so doesn't it
This one,
become weak and the market goes to a selling trend? Thank you.
it becomes when it's tested more than one time, but this one was tested. Let me see. It was support, market broke it, became resistance, then market broke the resistance, then it became support. So this one is fresh one, than this one is fresh one, from the old one that the market broke and went into and it became resistance, and then it broke it again to become support again. So you make sure that when, even if you have been having your old support, when the market breaks it and becomes resistance, it becomes resistance. But then when the market breaks it again and becomes support again, it's a new one. It's no longer the old one, so it becomes fresh. So this one was tested one, two, three. So this is the third time. Right now, sellers, buyers are trying to confirm the fourth time. So when resistance or support is tested more than three times, it becomes weak. But it doesn't tell you that the fourth time you hurry and go on and do what? And sell or buy. Eh? It means that it will likely break it. But we confirm breakouts with candlesticks confirmation. I believe you get me, my brother. You confirm breakouts with candlestick confirmation. Before a candle coming and closing whereby it has broke a resistance or a support zone, it's not considered weak. It's considered weak. Okay, like when it's tested more than three times, it becomes weak. But then that weakness, we confirm it when a breakout has happened. But then when the market comes on your support zone again, gives you buying confirmation, you can go on and buy. Shak, do you get me? Do you get me, or you are still confused?
No, I get you now. Thank you very much.
You're welcome. When it's tested more than three times, it becomes weak, meaning that anytime it will break. But then you don't. It doesn't mean that after counting the three times, then the fourth time, when the market is approaching it, you hurry and sell, and you be like it's going to break it. No, that's okay. Like when the market breaks it after like the testing it three times, then you can go on and sell after the market breaking it. But before the market breaking any resistance or support, don't rush to enter the market. But if it's been tested more than three times, the moment the market breaks it, you can go on and take your sales or buys because it had already become weak, and right now the market has broke it, meaning that you have more confidence or more confirmations for you to do what? For you to take your direction. So that's how you can trade breakouts. Breakouts are good to wait for the what? For retests. Or if you want to trade the breakout, if it's been tested more than three times, just like our brother here was saying, then the moment the market breaks it with a full bodied candle, then you can go on and buy if it was a resistance because it had already became weak, and right now the market has done what? The market has also broke it. So when you come on H1, you make sure that you are trading in direction with D1. And D1, we saw that we are still in the buying trend. Even H4, we're still in the buying trend. Um, and when you come on H1, still you find your support and resistance zones based on the swing highs. You filter them out and try to make sure that you trade with what is taking place on D1. So this was this is how my D1 sorry this is how my H1 is. I have this as my support zone 1 from 2634. The trick I've given you, the moment you identify that is area, you just add in 3 points. When you bring your line, like for example this one, and you find that your zone is around 26 34, 26, 34. You just add 3 points. 26, 34, 35, 36, 37. So you apply the first line, then the second line, meaning that that's your zone of support. The market may trade within that area, but as long as it hasn't broke it or hasn't closed below it, it's still a valid zone. Sellers, so here, mm, even if sellers, mm, sorry, so this market is here. So if this market comes, so now this is what I was trying to do here. Even if sellers try to come and break this zone, but as long as they haven't closed below 26.34, they haven't broke our what? They haven't broke our support. The trick is like this. When you move your line, for support, this is how it is, to simplify it for you. For support, when you move your horizontal line, move it below the candle, below the swing candle. Eh? Now, like for example, this one, it is this swing, yeah? Actually, this support started all the way from this swing, this one here. So when you put your line on that swing, the bodies, and find that your line is on 26.34, is on 26.34, is on 26.34, then you just add in 3 points. That is it for support. Then something for resistance. When you bring your line here, you find that the swing high, the higher body candle is at 26.64. You can count below. You can count below 3 points, 26, 30, 64, 26, 63, 62, 61. So the second line, um, you can bring it somewhere around there. So it means that you're having a tight what? A tight resistance. A tight resistance. Actually, that which is even more accurate than putting it up here. So even if you put it up there, you can still be valid, but putting it below, then you have a more accurate support and resistance zone. Yeah, so that's how it is. And for those of you that I trade with, you know that I keep sharing for you my own zones, so whereby you just refine them with yours, so that you can also have the same thing. By the way, when you have market structure, when you have a day's market structure, that's enough for you to trade. Now, like for me, this analysis, I'm already having, I already be having zones whereby I'm only waiting for confirmation to buy or sell. Mhm. Yeah, that's how it is. So when you come on H1, where you trade from, um, you apply your zones, and just like I told you, where in the moments whereby you have very many swing lows, then you focus on those major ones where the market respects them so much, so many times. Someone is raising a hand. Um, Joseph was asking, so you put the line below. This is how it is. Um, you can put the line for support. You put the line above, and then for resistance, you put the line below. Put the line below after identifying it. Yeah, that's how it is. Someone else was raising a hand. I don't know who it was. You can unmute yourself, then you speak. But just like I've been telling you, see these things, they come with a lot of practice. Like when you keep on doing them, they become part of you. And by the way, for those of you who are trading and you haven't got a laptop, you need a laptop because with a laptop you can mark your zones and then you leave them there, for future reference. For me, these are my different zones for the whole of this year. I'm still having them. So anytime when the market is trying to approach them, I would be knowing what is going to happen next. It's a market cycle. The market keeps on respecting these zones. So try to make sure that you can leave your history in the what? In the charts. You'll be tracking the market everywhere to be heading, knowing that this market is now here. So now for our pair gold, as long as we're still above 2634, any buying confirmation here, you can go ahead and buy. But as you can see, sellers have created a resistance somewhere here. These are actually not only even one resistance. Sellers have tried to make this market tight. You can see there's this swing, there's this one, and that one. So meaning that this area was respected 1, 2, 3 times. So it becomes a what? It becomes a strong area. So sellers have created this resistance, this tight area, and then they've also created this one here up. They've also created that one there up. So it means that if this candle closes with a bullish confirmation, one can buy because the market will be targeting a minimum of this level based into these swings, these ones here. 1, 2, 3. So when you buy here, if this, let's assume that this candle has closed with an inside back candle, when you buy here and the market is approaching this line, you just keep on trading your profits. Then sellers have also tried to create another resistance, here. Yes, when they break here, when buyers break this, oh no, when buyers break here, they'll be targeting this one. They may break this line and then when they buy more and then they consolidate within this area. But as long as you're still above 2634 on gold, keep on looking for buying confirmations. Yes, Shark, you're raising a hand.
Yes, I'm trying to ask what an inside backhand tells. What does it tell?
Mm. Oh, okay. So you haven't got to price action. And like in your class, you are still on market structure. So right now, when we go through the candlesticks, then it will be confusing you. But then inside back candles, they communicate reversals in the market. Inside back candles, that's when the one candle is big. An example of an inside back candle is here. This one here, the selling candle was big, then followed by a small bodied buying candle. The moment this buying candle is inside the big body previous selling candle, it's considered as an inside back candle, and it communicates that the market is going to buy. Then the selling inside back candle is here. It starts with a big buying candle followed by a tiny bodied selling candle. So it's inside the body of the previous candle. So here it communicates that the market is going to sell. But the inside bars are one of the price action candlesticks that are so common, whereby everyone needs to master them because they are so common and the market always respect them. So that's how gold is. For those of you who trade it, and but we have seen that we're expecting more buying than sellers. But right now we're still in consolidation. The market right now it's ranging. Um, the market right now it's ranging majorly within this area, this support and this resistance here, this tiny resistance, because this was respected 1, 2, 3 times. So it's a strong what? It's a strong area. So the market is trading within the range of 26.34 to 26.48. Yeah, but just like I told you, as long as we're still above 26.34, keep focusing on two buying opportunities. Yeah. So when you come on D1 still, you find your zones. But then after finding your zones, mm, after finding your zones still on D1, you don't forget trend lines. Just that today, uh, the the market is still ranging, but if it's a clear buying market on H1, make sure that, like for example, here, make sure that you don't forget trend lines. Even here, had had a buying market. The market was buying like this. So you make sure that you don't ignore your trend lines. When the market breaks your trend line support, look forward to it on your horizontal support. When it breaks your horizontal support, then that will be confirmation that sellers have took over the what? Have took over the market. But when the market breaks your trend line support and it's still above your horizontal support, buyers are still having opportunity of pushing the market back up in the buying trend. That is it when it comes to H1. But then on D1, when the market breaks trend line support, still it will be targeting the next support. Yeah, then when it breaks that support zone, then that's when the buying trend will have closed. Yeah, so that's it for today. And I'd like to stop here unless there's any question. Tomorrow we shall begin looking at major time frames for confirmations, and we shall look major at M30. Personally, while I trade, I get most of my confirmations from M30. Then I filter them out to H1. Have you all understood what we have covered today? How you can do your weekly market analysis and how you can filter it out up to H1. Mr. Obama, have you understood?
Yes, I've got it, sir. Thank you.
Okay, that's good. Lillian, Douglas is saying that more of it is needed. Yeah, so Douglas, you are in the mentorship and you're still on price on market structure, so you don't need to worry. You get it more. You get it more. Lillian, have you understood something? Lillian, are you there? Then, Madame Barbara,
Yeah,
have you understood?
yeah, I have most of it, but I believe for the one I haven't, I will get back where I need to. But yeah,
Or what? Where do you? What do you need more highlight on, Major?
well, I generally understood how to plot some of the like the support trend lines and the resistance trend lines. I
Mm.
understood the weak one, but then when it came to the daily, I think I just need to, like slowly go back to what you spoke about in order to
Mm.
now know how to, like relate. But week one, I understood it.
Oh, okay. So on D1, Major. By the way, still on D1. It's on to the trend, the horizontal levels, and even still even on D1, how the previous day kind of closed. You still don't ignore it, by the way.
Okay.
Yeah, let me go there. Mm. On D1, you don't ignore how the previous day kind of closed when it comes to price action, because it also tells much of how the next day is likely to move. Hmm? Let's go to D1. So I think I can remove these lines since we are done with them. Let me first remove them. So when we come on D1, um, here we can see that the previous day closed with price rejection from the buyers. Buyers were rejecting so much sellers. That's why today it started with more what? More buyers. Then when you look at how yesterday closed, no, this was Monday. Then this was Friday. How yesterday Friday closed? Friday closed with rejection coming from sellers pushing the market down, and that's why even putting the week one analysis, that's why Monday had to start selling more than it was doing what? More than it was buying, because Friday closed with a lot of rejection coming from sellers. Then um, this was an indecision candle. And when you look here, um, buyers, sellers got rejected from going beyond here, and then they rejected from this area here. So when you look here, still sellers tried to go beyond this area before reaching the 26,000, and they were rejected, and this candle closed with indecision candle. Okay, so this one was communicating more of consolidation, but being the fact that the trend was a buying trend, the market had to be more onto the buying side. By the way, like, try to make sure that you trade what D1 is like, the trend, the trend. The moment when you keep on trading following that trend, you will always make money. You always make money. Don't be greedy going against the trend. Everything up to even these things, you have to apply to practice them so that you can grasp them more. But while you keep practicing them, trading following that trend, it's one of the simplest way that one of the simplest things that will quicken your move towards breakthrough in forex trading. So even on the one, you look at how the previous day closed. This day had closed with a big selling candle, actually engulfing selling candle. So the next day it had to start majorly when it's selling before buying. This one closed with an inside back candle, selling confirmation, and the next day sold more. This was a big selling candle. Still, the next day sold fastly before it bought. Here, engulfing bullish candle. Then the next day bought more. By the way, like, try to make sure that before you trade, look at how the previous day candle closed. It will be communicating so much on how the next day it's going to buy. When you come on D1, right now it's been on gold. It's been a major buying days. So you can see that everywhere where the market was be giving buying confirmation, the market bought. The next day the market bought more. Here it's giving off in candle. Market tried to sell a bit, but then it bought more. Gave off in candle. Market bought before consolidating, giving off in candle, then the market bought more. And as long as you keep on trading, respecting the trend and the zones, then you can easily filter out for good entries. Yeah, so don't ignore the D1 candles, how they closed, how the previous day closed, and also how the previous week closed before entering the next week. That analysis is good to do it on Sunday. Yeah. Anyone else? Madam Barbara, hope I have answered you. I don't ignore how the previous day candles close.
Yeah, you have. I just need to start using my laptop because I've been using my phone more. So,
Oh,
yeah, I need to start using the laptop.
mm, yeah. Anyone else with a question or concern? If there's no one else with a question or concern, I would like to stop here. We meet again tomorrow. Thank you for attending. Have a good night.
Thank you. Good night.